Howdy, and welcome back to the Monday Market Update. This is Roy May with Bach Realty Group here in Bryan College Station, brokered by Real. Like always, I've paired with Mitchell Kleckley over at Pilgrim Mortgage to get you this info, so let's go ahead and get to it. Is consumer inflation showing back up? That's obviously we're all concerned about consumer inflation. So July's consumer price index, the CPI, showed that inflation rose 0.2%, with this monthly reading coming in just below estimates. On an annual basis, the CPI increased from 3% to 3.2% last month, but it's still near the lowest level in over 2 years. Declining costs for used cars and airfares helped inflation last month, as did kind of moderate readings for housing, shelter, gasoline, and food. So what that means to us is while the annual inflation moved in the wrong direction, this notch higher is partly due to a slightly negative figure from last July, and that got removed from the rolling 12-month calculation and replaced with last month's 0.2% reading. So inflation has made significant progress lower after peaking at 9.1% in June of last year. So easing inflation is obviously welcome news, as it signifies kind of a break from price increases for some goods and services for us. And plus, lower inflation also typically helps mortgage bonds and mortgage rates improve over time, which directly affects the housing industry. So let's talk a little bit about wholesale inflation, though. The producer price index, which is called the PPI, and it measures inflation on the wholesale level. It increased by 0.3% in July, coming in just above expectations. On an annual basis, the PPI rose from 0.2 to 0.8%. So what that means for us is while annual PPI also moved higher in the wrong direction, it was still coming from a very low level and remains extremely muted, well below last year's peak at 11.7%. There's been mixed chatter from the Fed regarding whether they'll hike rates again at their September meeting. So you got to remember, the Fed started hiking their benchmark Fed fund rates last year to slow the economy and help curb runaway inflation. The Fed will be closely watching the upcoming CPI and PPI readings for August, which gets released in September. And their favored inflation report, the PCE, or personal consumption expenditures, as they weigh this decision on whether or not to hike rates. Talking about home price appreciation, it's heading higher. Black Knight's home price index hit an all-time high in June with, quote, nearly every major market experiencing month-over-month growth. Home prices rose 0.7% in June, and they are now up 0.8% on an annual basis, with appreciation at 2.9% through the first 6 months of this year. At this pace, prices are on track to appreciate 5.8% in 2023. So what that means to us is the latest rise in home prices reported by Black Knight mirrors that the strong growth that's also been noted by Case-Shiller, CoreLogic, Zillow, even the Federal Housing Finance Agency in the respective indices. These gains are a far cry from the housing crash that a lot of media pundits had forecasted, and it shows that opportunities exist right now to build wealth through home ownership and then the subsequent appreciation. Talking about the job markets. After staying below 230,000 for 3 straight weeks, the initial jobless claim actually rose by 21,000 as 248,000 people filed for unemployment benefits for the first time. Continuing claims fell by 8,000 with 1.684 million people still receiving benefits after their initial claim. But this latter metric has been on a downward trend from the high of 1.86 million reported in early April. So reflecting it's a mix of people finding new jobs and also the benefits expiring. So what that means to us is the initial jobless claims have remained relatively low lately due to the difficulty hiring that many businesses are reporting. A business that can't find qualified workers certainly isn't going to lay off the ones that they have. For example, the National Federation of Independent Businesses noticed that 92% of small businesses looking to hire last month could not find qualified workers for their positions. So what we'll have to do is we'll see if this latest initial jobless claims report is a one-off or the start of a new trend greater, reflecting some of the weaknesses we're seeing in the labor market. I just wanted to kind of end this with our local College Station Bryan housing report. This is good data to have, and it obviously, the market update is more of a national picture. But monthly, our local Association of Realtors here in BCS sends us out all the numbers. So I just wanted to show you this housing report. Just kind of run through it right quick. You can see the median price, and what they do is they compare these, from the July before, the month before. So July's report 2023, they're going to compare it to 2022. So you'll notice the mean price went up 6.9%. A lot of this talks about, we talked about the value of homes and the prices going up. in the report nationally, and obviously we're seeing it here in our market as well. There were 866 listings in July, and that's almost a 23% raise from last year. So that's a pretty significant increase. But houses are staying on the market a little bit longer. The closed sales, it went down by almost 15%, and so the days on market. You'll see it's 48 days on market and approximately 37 days to close. So you're talking about 85 total days from list to signing the documents and closing, and that's 19 more days than it was last year. And obviously, we all know that last year the market was was pretty crazy. So obviously these numbers are going to increase, and then the months of inventory because we've had an increase in listing. But we've also had increase in days of market. We actually have increased our months of inventory. We're all the way up to 3 months of inventory, which was compared to just over 2 months in July last year. So I just want to give you a quick snapshot of what it really looks like here in the Bryan College Station area. And if you have any questions whatsoever about the market here locally in Bryan College Station, or Brazos Valley, or even down around the Houston area, we have agents that work down there, including I have a part of Spring that I work in. Feel free to reach out to us here at Bach Realty Group. And then obviously, if you have any questions about mortgage or the market, you can always reach out to Mitchell Kleckley over at Pilgrim Mortgage. So thanks so much again this week. Y'all have a good one, and we will see y'all next week.